Hello, this is Addis Fortune bringing you the latest business news of the week. We delve into the deflating real estate market, a multi-billion Birr investment in agricultural hubs aimed at tackling inflation, commercial farmers on the brink of foreclosure due to tax demands, global Bank Ethiopia doubling its profit amidst liquidity tussles, and the Food and Drug Authority struggling against a surge in contaminated foods and illicit pharmaceuticals. Stay tuned for details into these significant developments. The once thriving real estate market is facing a decline in demand and property prices, attributed to political instability, discouraged diaspora buyers, and a scarcity of loans due to a sluggish economy. The sector, heavily dependent on continuous credit flow, is experiencing difficulties following the National Bank of Ethiopia's shift towards inflation-targeting monetary policies 5 months ago. Over the years, construction costs for a square meter ranged between 40,000 Birr to 60,000 Birr, while selling prices have tripled with a significant down payment of up to 30%. However, prices for homes and apartments have dropped by nearly 15% over the past 6 months. Industry insiders highlight the impact of recent changes in property valuations, the imposition of property taxes, and the scarcity of credit as significant challenges. The suspension of property transfer services at the Addis Ababa Land Development Administration Bureau compounds the issues, discouraging investors from injecting capital. The banking sector is also facing a liquidity shortage attributed to consecutive mandatory bond purchases by the government. Experts recommend adjusting homebuyer expectations, shifting from the typical 70% loan provision to a more realistic 30% in the current financial landscape. The Addis Ababa City Administration is implementing a major initiative to address food inflation and improve access to agricultural products. This involves the establishment of 3 large agricultural market centers, costing 6.8 billion Birr, aimed at offering essential goods at a 20% discount to tackle rising food prices. The bidding process attracted 600 offers, with 57 wholesalers and 143 retailers winning bids. These businesses will operate under annual rental agreements between 327 and 367 Birr a square meter, occupying shops of 25 square meters to 83 square meters, cutting intermediaries in the agricultural supply chain. While some participants, like commercial farmer Bereket Worku, known as Bereket the Farmer, with nearly 500,000 social media followers, express excitement about cost savings, others, such as Eastern Agromart Share Company, raise concerns about challenges, including the impact of a 15% value-added tax on sales. City officials emphasize close monitoring of market dynamics and plan to conduct thrice-weekly market surveys to ensure adherence to discount rates. The operational model involves outsourcing management to the private sector for efficiency. The market centers are seen as an attempt to secure the food supply in Addis Ababa and Dire Dawa, which are net food buyers vulnerable to supply disruptions from regional states. However, experts caution that while the initiative is a positive step, market centers alone may not ensure long-term sustainability in addressing food supply challenges. Stay tuned. We will be back after the ad. We are back with more highlights. A crisis is unfolding where around 5,800 commercial farmers are facing foreclosure, high tax demands, and a lack of working capital in the Gambela and Benishangul Gumuz regional states. The farmers, represented by the Crop Producers and Exporters Multi-Sectoral Association, are urging regional and federal authorities to intervene. They seek a OAN restructuring from the Development Bank of Ethiopia, which has provided 70% of their financing and tax relief from regional governments due to the unstable security situation and property losses caused by political unrest. Benishangul Gumuz regional state has initiated tax penalty waivers for some businesses, but farmers contest the legitimacy of initial tax demands. The crisis highlights the difficulties faced by the agricultural sector, with smallholder farms predominant, and calls for a strategic shift away from over-reliance on rain-fed agriculture to address climate change, traditional practices, and demographic pressures. The Policy Bank acknowledges the need for prompt action and remains committed to supporting commercial agriculture while taking a firm approach towards loan defaulters. The crisis underscores the broader systemic issues impacting the financial viability of commercial farming in the regions. Formerly known as DBUB Global Bank Ethiopia plans to redefine its corporate identity and boost its market presence, rebranding itself in the ended financial year. The bank aims to build a new headquarters in the financial district of the capital as part of its transformation plan. Despite facing challenges like liquidity constraints and foreign exchange losses, Global Bank Ethiopia reported an impressive 88.7% increase in net profits, reaching 523.6 million Birr. The bank's focus on digital innovation, operational efficiency, and strategic foresight have contributed to its financial success. However, concerns were raised about increased expenses, particularly in wages and benefits, and shareholders questioned spending on aesthetics and renovations. While Global's foreign exchange dealings showed a recovery in net gains, its liquidity level decreased, prompting suggestions for better liquidity management. Total assets increased by 33.8%, and it aims to meet the central bank's minimum paid-up capital requirement of 5 billion Birr by 2026. Global Bank's strategic emphasis on digital innovation and operational efficiency is underpinning these financial gains, according to Tesfaye Boru, Ph.D., president of the bank. He emphasized the significant strides made in revamping the bank's digital capabilities, which have been instrumental in enhancing service delivery and customer engagement. Its commitment to strict oversight on resource mobilization and cost management was considered vital to sustaining its growth path. Ethiopian Food and Drug Authority has highlighted a surge in illicit pharmaceuticals and contaminated food, raising concerns about public health safety. During a half-year report, the authority revealed the seizure of 114 tons of outdated, uncertified, adulterated, and unlabeled food items valued at over 66.5 million Birr. This led to the closure of 98 companies. An assessment of 200 retail shops over 6 months reveals widespread contamination of food, particularly in products like butter and untraceable items such as salt and palm oil, according to the half-year report. The issue is compounded by factories operating without the required certification from the Ethiopian Food and Drug Authority, creating a significant tracing gap. The authority faces obstacles in regulating and enforcing standards, with efforts to ensure fortified standards facing financial resistance from manufacturers. A shortage of human resources complicates matters, with the authority operating with only 35% of the required human capital. It amounts to 1,785 personnel in the city and worsens in other regional parts of the country, as making new hires is not viable under the current economic circumstances. Regulatory hurdles persist, not in the formulation of laws, but in their implementation and enforceability. Experts highlight mandate overlap among federal agencies and a lack of synergy as major impediments to effective enforcement. That's all for today. We'll be back with more updates next week. May good luck and fortune always be with you.